Recording. So, is there anything you've learned you want to share? And you could share your screen if you want.
Yeah, I could let me pull this up. Yeah, I don't know if you've looked at a market profile chart in the past, but I can show you what
It's
I
been a
have
while.
this up.
So then, is this going to be more than traditional support and resistance, like volume shelves, or is this going to be intraday? Like, what do we, because volume profiles a lot.
Yeah, this is hopefully you can see it.
I
I don't
can
know
see
why
it.
it's coming up in it's coming up in a little frame for me, which is awkward. But I'm going to try to switch back to the window. Do you still see it?
I still see it. I'm in
Okay, cool. And you see my
maximized.
mouse cursor moving around as well?
Yes.
Okay, cool. Give me 1 second. I just need to reload history. I don't know why it's not uh refreshed for me. Okay, that looks better. Okay,
So it
it's
has
not
the point of
working.
control, and it drags it across. Does that do it automatically?
Exactly. Yeah, it does it automatically, uh, which is why I like that. Oh, okay, so it should come up now. Okay, this is better. Yeah, so this is the market profile, and it's actually pretty straightforward, right? The idea behind a market profile, again, I don't know how much you know, but it's basically the idea is it's like a 30, I do it at 30-minute intervals, so it's like a 30-minute chart, right? So if I just sort of pull this up, this would be today's kind of 30-minute candles, right? So each of these TPOs is a 30-minute candle,
Yeah.
essentially. Um, so as you see, we kind of went up, came down, and then basically dumped all day. And then towards the end of the day, we kind of found some balance, right? So
Oh yeah. I
that was pretty much the day.
I took a
So
huge bet
yeah,
on
so
that latter
that's
part.
yeah. How was your trading day today?
It was break even. It was a wash
Oh, okay,
because I went
that's not
long
bad.
at the very beginning, and it was a big mistake. So I went long again at
Well,
the
it
end of the
looked
day.
it was deceiving. I'm telling you. I mean, it was very deceiving. It looked like it was going to and especially the close we had. Like if you look at the close on Friday, this was an amazing move, right? We went all the way up to 38.70, 38.70. Yeah, we touched 38.70. The overnight session was pretty good too. So I personally would have taken longs too. I was out of the market in the morning, but I would have taken longs too. I mean, that was my bias going in. I had not expected it to dump like it did.
It's still in the bear trap
So,
phase. It's trapping bears.
yeah, well, this morning it seemed more of a bull trap, but I agree. I think, it is still in the bear trap phase.
Like bull trap
But
would
yeah,
make sense a
so
little higher. Like yeah, I'll explain later. But yeah, continue.
yeah, so basically, this market profile. So I like to view, it. So again, if you split it out, it looks just like 30-minute candle bars, no different than that. But then if you kind of take a step back, it kind of shows you what the market's been doing, right? Again, this is no different than a candle bar, but I think it gives you, you know, something that candle bars don't, in my opinion. It tells you the behaviors, or at least you can interpret the behaviors shaping the market. So
By the
if
shape of the
you, for
profile.
instance, exactly, right? So for today, like today's profile is B-shaped, which to me tells me there's a lot of long liquidation today that happened.
Yeah, there was.
Um, on the other hand, a P-shaped profile is a short covering. So generally, you'll see that on days where there's a big rally, right? You'll see a lot of short covering. Um, you know, and then this day, this was Friday, I believe, which was a D-shaped day, more or less, right? Which is a pretty normal distribution, and that's what you expect on a Friday before the holiday weekend,
Mm-hmm.
right? Uh, a fairly even or balanced auction. Now, again, balanced auctions or normal distribution days don't happen that often, but you will see that they do happen, especially when there's not a lot of news affecting the market. It's a pretty even match. So at the end of the day, I think why I like market profile is because it reminds me what the market is, right? The market is a two-way auction. That's what it is. If something gets too cheap, it's going to go up in price. If something gets too expensive, it's going to go down in price. And the movement of the market shows me the behaviors of the people that are driving those decisions. So that's why I really like the market profile. Just maybe just to throw a few interesting tidbits at you. Um, for instance, this you see the overnight session, and you see how there's three so let me just zoom in a little bit, right? So you can see this. And essentially what we do is just assign a time period to each 30-minute interval. So
Mm-hmm.
for instance, this is the overnight session and so from 6 to 6:30 is the A period, 6:30 to 7 is the B period, so on and so forth. Um, what you see here is it tried to make a high multiple times, right? Um, so in traditional market profile speak, this is called a poor high or a weak high. You know, I would just call it a poor high, I guess. And the reason for that is because it tried to make another high, but it did not find
Value.
clear rejection of those prices.
Okay.
So that to me tells me that the market wants to go up. That does not mean that it's going to go up today or tomorrow. It may go up at some point, but this poor high is interesting. Conversely, this is also a poor low. You don't see any excess at this, right? So what is a strong high or a strong low is generally when you see a lot of excess. Right? So today's high was a very clear. You see a lot of excess, right? So the A period went up to 3901. It touched 3901 and was cleanly rejected. And you see a selling tail here. That's a strong sign of an auction, right? So it got too expensive, quickly rejected, and went back into range.
All right. Quick question.
So
So then,
yeah,
when did you note, like, when did that appear, that tail? Because there was a period in the New York Open or New York Session where I was like, where's it gonna go? Is it gonna go up or go down? Because I had both a breaker to the upside and downside of
yeah,
15 minutes, so I had no idea. So I that's why I assumed long. So how, like, at what point was it clear that that inefficiency was there, or that
yeah.
tail
So
was
right
there?
after the A period, right? So it opened up here. It opened up at 3881 because the overnight, was a pretty good, pretty strong auction to the upside, and it went up immediately, 20 points, and then it dumped, all within the first 30 minutes. So you see the B period opened below the A period.
Uh huh.
And that to me is when I say below, as in,
Oh, at
it's
10.
essentially, yeah. So B period starts at 10 o'clock.
Okay,
And that to me tells me that this is bearish
I see.
because you see a clear rejection. So it went up to 3901, rejected 3901, all within the first 30 minutes. That to me, that long tail that you see, that to me is clear excess at the high, which to me, the behavior that is being showcased here is the fact that this is too expensive. 3,900 is too expensive. I'm not going to go there. And I think the reason it went there is because it tried to repair this poor high from Friday or whenever this was, right? This was the second. Oh, this was overnight. So that's what it was trying to do. And it may well yet do that tomorrow. I don't know, or maybe tonight. I don't know, or next week. It doesn't really matter, right? When it does it, but it will try to repair that. But generally, the market ends in balance when it leaves excess at the highs or lows. So whenever there's no excess at the highs or lows, that tells me that the auction has not completed. And when the auction is not completed, the market tends to go back there.
So you saying when there is no excess, and excess is the representation of these tails?
Yeah,
Okay.
exactly.
And then the excess is a magnet. The tails are a magnet.
Yeah, because again, the excess indicates completion of the auction. It went all the way up here, got too expensive, got swiftly rejected. The same thing on the downside as well, right? So if you look here,
So we want
I'm
to
using
see
my
P's and B's. That's what you're saying?
well, yeah, exactly. You want to
Okay.
see clear rejection of highs and lows.
So
And
then
when you don't see those rejections,
are we basing
so
decision and judgment off of the previous market profile day?
yeah, so you base it off multiple days again until such a time that it's repaired. So for instance, here, this is very clearly a sign of a poor high to me. Um, but that does not mean that there aren't poor highs early on as well, right? So there's also plenty of naked point of control.
Yeah.
There's one at 39.17. There's one here down below at 38.09, 38.10. So these do tend to get revisited as well. And I would expect the market to revisit those points of control at some point in the near future, hopefully as early as this week.
So then,
What the market profile cannot predict is which direction the market goes
oh,
in,
okay,
but
that was my next question.
yeah, I mean, I don't think anything can, right? Like, quite candidly. But what it can tell you is if it is heading in a certain direction, what it might tend to do.
Okay.
So again, if I were to say, look, if you look here, right? Look at this profile for this day. This is a pretty this is what I would call a trend day. And you see the prices got really cheap, 37.88, got swiftly rejected. That's some excess at the low. So right now the market is in balance. It got rejected here. So 3900 is too high. 37.88 is too cheap. So that's why it's in balance right now. So it's going to need some catalyst to drive it out of balance. What that catalyst could be, I don't know. It could be non-farm payrolls, could be something else, could be CPI, FOMC. It doesn't matter, right? It's going to need a catalyst to get it out of balance. But right
Hmm.
now it's at balance, essentially.
Yeah. We need to check the calendar, see what high impact news is coming out.
Yeah, I think Friday is NFP, so that could be
Oh,
a
wow.
market moving day.
Yeah, because that's what my forecast software is saying is that Friday is the day that we're expecting a rollover uh, short term. So it could be a high, a possible high of the week.
Yeah.
So,
So it could be, I mean, again, we don't really know. Anything can happen, but it could be when I see a lot of poor highs in this profile. So it may tend to repair those poor highs.
yeah.
But again, I think if you step back, the market is in a pretty, you know, is in a state of balance, right? It's been that way for a while. Like I think ever since mid-December, it's been in balance, which is what we expected, right? I mean, mid-December the major time frame participants are all gone. So you expect balance. It's kind of playing ping pong between the highs and the lows in this range, 37.88 and 39.15, 3900, whatever. So I do expect it to break out of balance this week.
Hmm.
Again, direction is anybody's guess, but that is going to be driven by catalyst.
Right. That makes sense.
So
This
yeah,
thing,
that's all there is. I mean, it's really a simple tool. It's not complicated, I think, but it's a nice way to step back and look at the overall market context.
I can't wait to see just how you go over how you would make your analysis to a trade plan in a bias or direction for the day. Just because it seems really neutral, and it makes it harder to use to trade because it's so neutral. The things I use is more just okay. We're thinking this direction, and it's a matter of patience for the setup for that direction. That's kind of
Yeah.
so it's a lot different to where this could be really useful for I don't know, like trigger for a buy or sell entry. That's what it looks like to where like a confirmation tool because like I had at the New York Open a possible up or down kind of setup, and if I would have saw the market profile, I could have chose a better direction instead of the long. But yeah,
Well,
that's
In all fairness, right? I mean, this morning, if you look at the market at 9:30, it looked like it was going up.
Yeah, but
But then
then
you saw it swiftly reject. And then
yeah,
when B period opened up, that was bearish, right? And
yeah.
then C period was actually open below B period. Um, and it was a choppy day, don't get me wrong. So it was hard to trade.
So
But,
live, that
like
would
this is
be a
B
different
period.
story. Like
What?
like when it's live, uh, starting at that beginning period, like 8 a.m., 9 a.m., would it be a different story? Like, is it harder to interpret live?
Not any different, right? Because I mean, if you look at it at 9:30, you see these A prints start showing up. It's not complete by any measure, but it is starting to show up. At 10 o'clock, the B period opens up at 38.62. So at that point, the A period is already printed. So right there at 10 o'clock, you can see, okay, the B period's opening well below open, and it's also below A period. So that means, there's something bearish going on, right? So you have a bearish bias the moment the B period opens up.
So
And
then
then once you finish, yeah, go ahead.
on the previous profile, going back to what is that? It looks like it's the previous day. So it looks like it got
Yeah, this
below.
is the overnight.
Okay, the
This is the
overnight.
overnight profile.
So then it looks like it got below that highlighted area. Is that the value area low? So
Yeah.
yeah, okay. Because there's a highlighted part. It looks like the outer bounds is hot. The value area high and low. So if it got below that value area low, then would that be a sell signal?
Exactly. Yeah.
Okay, so
Now,
that makes
I
more
will
sense.
admit the value areas do keep changing, right? But what you do want to look for is where is the value area migrating? Is it migrating higher? Is it migrating lower? Um, that's an important determinant as well for your direction.
So then
Because the
you
value area isn't set in stone. It's going to change throughout the day.
how do you determine where's it migrating?
Um, because you keep track of it, right?
Okay,
At least I do. Like when I look at the value area where it is right now. Like for instance, right now the value area is at 38. Well, the value area, but you look at the point of control, and the point of control is at 38.50. So I'm going to keep, obviously I'm not trading the overnight session right now, but when I come in tomorrow morning, I'm going to see where is the point of control now? Where's the value area with respect to the point of control? Is it overlapping? Where has it migrated? So I do think there is some level of analysis there as well that you would keep track of, or at least I do keep track of intraday, and that provides some inherent bias as to what is the market doing, what is it telling me it's doing, etc.
okay. Your answers are very neutral, so it makes it a little difficult. It's like your answers are exactly like a volume profile. For the most part, they're without bias, like or at least like a DOM, like the tape, the ladder.
Yeah,
Where
I mean, I think truth be told, right? The market profile is not a trading signal generator. I don't know what to call it, right? It's not like I don't trade off the market profile, but it does give me context on what's happening.
right, which is the behavior, the P's and B's, and
Exactly.
and then things that
Yeah.
would be like short covering. I don't know. Those are more like speculations, like oh, possible short covering. But yeah, I have a hard time trying to figure out like anything actionable or practical. I know the P's and B's, like a B is okay to buy the lows and okay to I think sell the highs, and then no, that's a P. That's a P. Sell the highs, but oh wait a second. I don't know. I just remember like the way the tail is. You want to be buying the lows in the direction of the tail. Is that right? Or if it's a P,
Yeah,
buy
so
sell the highs in the direction of the tail.
well, the profile doesn't take its full shape until the end of the day, right? So
Yeah,
it's not
which sucks.
actionable.
Yeah.
You can look at it. Like I can look at today's profile and say, oh, that's a B-shaped profile. That means there was a bunch of longs that were liquidated. Um, but it's not actionable. I think it's just context for tomorrow. Well, there's a bunch of longs that got
Okay.
liquidated. What's going to happen today? We don't know. Maybe the market could go lower. But it's not informing a trading decision necessarily.
Okay.
What is informing trade is when I look at the developing profile, right? So again, when I look at this, I look at it in the split view. So it's not again like if I look at this profile at 10 o'clock in the morning, the A period is out there, the B period is starting to print, right? So maybe I'm here somewhere. And then right off the bat, so none of this stuff exists. None of this stuff exists. Only the A period is printed and the B period is starting to print. At that point, I see that the B period is below the A period. Well, that is bearish, right? And it actually starts going all the way below the B period, below A period. You see that? So A period stopped here at 38.54. The B period keeps going down. So that is bearish. And that's when I might consider going short.
Okay. All
Um,
right.
so that's how I would trade off this profile. But again, I would not um, use the shape of the profile to guide any decisions on, or at least any trading
Okay.
decisions. It's helpful for overall context, but it's not uh, I don't see the market profile and say, oh, this is a P-shaped day. That means there's a lot of shorts covering, right? I don't think of it that way.
Okay. So
But
you look at it
yes, I do
more.
think of it that way, but I don't use this. I don't take my trades based on that.
I see. The pattern is not in the shapes. The pattern recognition is more of, I guess, it looks like how it's behaving at the POC and then the value areas. Is that what you're saying?
Yeah, and it gives you formidable targets, so especially if you're an intraday
Right.
trader,
The
you're
POCs.
looking for targets. It gives you like, for instance, if tomorrow ends up being a green day, uh, then I know that I'm looking for, maybe somewhere around the 3,900 range, right? First of all, there's this poor high here at 3,906. So if it does end up going higher, then that's the target I'm looking for. If it goes lower, then 3,808 is what I'm looking for. So that's how I would trade off this. Again, you still need to be in the right direction. You have to pick and choose the right direction. That's
Right.
not something the market profile will tell you.
Okay.
But once you do have the right direction, then at least you know what targets might be.
Okay. Like, I like how no matter what, it seems like risk management is still like king because like there's a probability inherent in each system, and then there's a probability within the day of trend day or not trend day. So it that makes it
Exactly.
interesting. Okay, because then it means that there
Yeah.
is no edge really, but the real edge is distributing your chances over time.
Yeah. Yeah. And, again, if you had to, again, people use fib extensions and all, everything. And I just look at this from a behavioral perspective and I say, okay, well, the market ends up going down, which it has been for a while. Right now it's in balance. So we don't know which direction it breaks out in. It might break out this way or this way. Again, all depends on news this week. NFP is coming up on Friday. That could be a huge market.
Yeah.
Again, we don't know, but most likely will be. Uh, and if NFP has glimmers of hope, then we might see the market go up. What are potential targets? You've got 3,900, 4,000. You know, and if it heads lower, then it could go as low as 36.40, at least in the immediate future. Um, so that's how I use this. Every morning, I open this up and I see what it's doing.
Awesome. Okay. Anything
Yeah.
else you want to
So again,
share?
not a trading tool necessarily. What?
Anything else you want to share?
No, that's it. I mean, again, I will be candid. I am still learning this. I'm not an expert at it in any measure. But there is a book called Mind Over Markets by Jim Dalton that is apparently the Bible for market profile. I have
Oh,
not read that book yet.
so
So
there's
all my knowledge is based on YouTube videos, which admittedly is not the best source for trading information. But that being said, I'm hoping at some point I get around to reading that book.
yeah, like there's a book called Markets in Profile, and like that's what was recommended by Deja Brew. You know, he's the only guy that I
Yeah.
know that does the market profile. So I've been like trying to understand his methods. But yeah, like I, oh, okay, yeah, it's something that's an interest of mine. If I can actually get an understanding or grasp of it, like I'm so used to a way of thinking that it's confusing when I look at the market profile. So I'm glad I could, I have this recording, I can review it and just try to like really see the patterns or see what you're saying and try to practice it.
Yeah, and and maybe I think again, what I will do is in the mornings, I will review the market profile for the previous day and the overnight sesh and see what is happening, right? That'll give me that leads me to generate some hypotheses on what might happen during the day today. Um, and that's all there is to it, right? Again, I'm not entering trades based on the market profile. I would not recommend anybody do that. It's a context tool. Uh, it's like doing a behavioral profile, right? As an FBI investigator, might do for a criminal.
Hmm.
This is the same idea behind the market. It's almost like the market's talking to you. It's telling you what it's trying to do. You
So
know,
then,
right now the market's telling me, "Hey, I'm in balance right now. I don't have any information to go off, so I'm just gonna, kind of play ping pong," which I have been doing since mid-December. If the market were a person, that's how it would speak with me. And I know this sounds crazy, but that's kind of how I think of it.
okay.
Uh, so the market's saying, give me new information so I can choose which way to go. Right now, I don't have that.
Hmm.
So again, that's how I think of the market profile.
Interesting. Yeah, like it's weird when you say like context tool because I'm trying to understand what that means practically. Like, oh, it's a context tool, and when I think of context, I think of something that it gives like a added support to a bias. Like that's what I think of context. When I think of context, I think, oh, okay, it's building this case or bearable. It's adding. That's kind of what I think
Yeah.
of context. It just adds to a certain bias. But when I hear you speak about the volume profile, it seems like there is no case being built.
I think it can provide context behind bias. But right now, what it's telling you, again, if for a person, what the market is telling you is I'm in balance.
Hmm.
And you can see that very clearly in the market profile, right? It's in balance since December, mid-December. Um, and that in itself tells me that there is no bias. So you should not have a bias right now. Like wait for the market to get this additional data. That will determine the bias through January, maybe even the rest of Q1.
Interesting.
If you remember, mid-October, or when was it? Early November, we got that CPI print that came in cooler than expected, and the market just bounced, right?
Hmm.
That's when I could, if we did the session back then, I would have told you, well, this is extremely bullish. Here are the upside targets based on the market profile, and the bias is obviously bullish. But right now, the market is not bullish. It's not bearish either. I wouldn't call it bearish. Like there's a lot of doomsdayers out there on Twitter, what have you. Like we're talking about all kind of crazy targets, and I'm like, I don't think we're there yet. We're in a state of balance right now. Um, so I think that's what the market profile is telling me right now. Again, that would change based on further information, and then I can tell you what bias to have. But for now, at least, you know, and for instance, actually, to give a good example of this would be, sort of different example of this would be if I were, uh, looking at the bonds, for instance, the treasuries.
Okay, the
That's where my
bonds.
bias would probably be on the long side because the bonds have sort of dumped so much this year or last year that I would expect that they would start to, rise at some point, right? So that's why my bias based on the market profile would be bullish. But
Uh,
again, I can't say the same for equities because the equities have truly been in a state of balance.
right.
And the S&P more so than the NQ. I think the NQ has been a little more bearish leaning, but again, it's not. I think overall they're still in a state of balance.
Okay. Well, if you should be free, like I could present whatever questions you got if you want to learn from me.
Yeah, I'd love to.
Yeah.
This is great. I mean, I think this is the first time I'm presenting the market profile again, 1 month's worth of knowledge. So
like
um, I
I
appreciate the questions as well.
yeah, because I have just been having a. I'm a very pattern intuitive kind of driven person, and I just can't grasp the market profile. It seems to me like it's more of an a bias tool. Like all of the volume stuff, the stacked imbalance gives more of a bias, but it's weird because they get erased by other biases. And, from when I look at the volume profile, I'm like, oh wow, those stacked imbalances disappeared. They got absorbed. But
Yeah.
yeah, for the most part, most of the volume uh, in order flow is that you don't see the bias until later in the day, and that makes it difficult for me, and because I like to kind of interpret data and patterns of that and possible probable directions. So I can't do that unless I look at like shapes, and that's kind of what the markets and profile book got me looking at. It's like I didn't get far in the book. I skipped around and I
It
saw.
it reads like a textbook more than a trading book, honestly.
Yeah,
That's the
so
problem with it.
I think I would change my learning format to video. It's just finding someone who's like good at explaining, okay, this is the process, this is the system that which you do it, and I just haven't had the desire to buy a volume profile system. Maybe in the future, it's just I haven't gotten there yet. I'm so just enamored
Yeah.
with just build.
And you don't need to. I think Ninja actually has it built in. As long as you have the unlimited license, which you probably do through Apex anyways.
Well, system
Um,
trading system, not like system trading.
gotcha.
Yeah, like a trading system is like a package to where you get practicals and traded setups to where you can execute it and interpret the
Gotcha.
market. And yeah, like I feel like you're closer to it than I am in terms of being able to trade off of market profile. So like I appreciate your your input. So
Yeah. And again, I don't know if the market profile is a trading tool necessarily. Um, I personally have not used it for that. I don't know if anyone else has been successful at it, but I'd be curious. What it does tell you is that markets are extremely visual. Um, and they will come back to these visual points, right? So imperfections of the market profile, actually, like those poor highs I showed you, right, where the market's tried thrice to take out that high. It
yeah,
tells me that there is acceptance of that price. It's just not acceptance above that, which means the market might tend to come back again and take out that high. Uh, it may happen today, it may happen tomorrow, it may happen a week from now, or even a month from now. I don't know. Uh, but that's where the market profiles falls short because it doesn't tell you what will happen today or tomorrow. I can't predict that. Uh, that being said, you could use if something's fairly close, you could probably make some sense of probabilities. There's probably a 50% chance or 60% chance it's going to go out and take that poor high out. Uh, at least that's how I would interpret it. So yeah, at the end of the day, it's a game of probabilities, and you'll have to just sort of interpret it that way. I don't think there's any quantitative model that's been built on top of the market profile, but it could be. I think it's an interesting way to approach it.
yeah.
Yeah.
So then
I for one feel I don't mean to interrupt you, sorry, but I for one feel that its market profile could be a lot more useful uh, than stacked imbalances, for example. Because stacked imbalances happen all the time, and I do not think that's a reliable trading signal, in my opinion.
yeah, like I mean for entry, it's not bad. Um, just because I don't know, like everything's a probability, and just for like live probability, I think it does a decent job. You just kind of have to guide it.
Yeah. Yeah, maybe for quick scalps it might be because you have a selling imbalance. You might tend to see a bit of a tick down, so maybe 10, 12 ticks. Um, I do not think it's going to be super reliable. Like I personally just like manually backtested the ES for selling imbalances or even buying imbalances for the matter. And I found that there's hundreds of them that occur during the day, right, in the ES, and it's not a great predictor of what will happen next. Uh, but again, as long as you're aiming for like short scalps, maybe 5, 10 ticks, you're probably okay.
Yeah. Did you have any questions regarding other that like what I do? Like, because I don't know how to
Yeah,
like step into this.
yeah. You've talked a lot about the market structure break.
Yeah.
Uh, I will admit I don't know what that means. Um, mind educating me on market structure break? And I realize it's an ICT terminology. And I should probably just watch those videos. But every time set up my YouTube playlist and I'm like, that's just too much to watch. I'm not watching it.
Yeah. So those videos, it's more of just the a combo. I've been wanting to purchase. I think there's some kind of video editor. It's I forgot what it's called, but I was thinking about buying it for the gear, and I was gonna just chop it up. But oh, so we got somebody from YouTube that might join us. He actually does really good calls. I'm kind of curious if he'll come in. Like he's messaging.
Oh, very cool.
Oh wait, hold on. He said okay. I don't know what that means. I try to invite him. See, I said I'm doing him. Uh, we're
Is he a trader as well?
I'm doing something highly profitable at the moment to update you on. Okay. Okay. So he's not going to be in today or now.
Gotcha. Okay.
Uh, so
How does
I'll
my voice sound? Does it sound good?
no, it sounds good.
Or
Like I don't
okay.
understand why you would need a new mic.
Yeah, I mean, I'm just using a regular Bluetooth headset. Um, Nothing too complicated. All right, cool.
Okay, so then market structure break. I'll share my screen. So can you see what I'm seeing? Can you see what I see?
Yes, I do.
Okay, so I just did
I'm
that.
just trying.
Um, what market structure break? Um, so then market structure break is this is an indicator that comes close to what I use on MetaTrader 4. MetaTrader 4, I use this thing called Market Reversal EA, and it comes closest to it. So, Market Reversal EA just, I think, does market structure breaks. And then with this indicator on TradingView, it does change of character and market structure break. And you could see that it does break of structure and change of character. So this one I think is a little faster, um, but it comes close because it's at BB. I don't know what that stands for, but
Oh, that's Bollinger Bands, I think.
no, break of block. I think that's what that stands for, but it's
Okay,
break
never
of
mind.
block after break of structure or change of character, and I think change of character is more to the I don't know. I don't know how to discern it. I got to read up on it, but it's really close to market structure break. In market structure break, all it is that. Hold on, let me double check. Okay, stay safe, dude. Okay, so that guy he won't be with us. Yeah, so this guy Lunar, he does a YouTube channel, and his method is more ICT, with the order blocks and all that. And I was just kind of curious,
Gotcha.
and like when I listen to his videos, his analysis sounds pretty sound, and his signals are pretty good too. Like I was a little more aggressive on the long side, but his when he messaged when he was going long on MES, it was actually like the correct time. So like I don't know if he has more patience or what he's looking at, but I'm kind of curious. I tried inviting him right here. I'm doing a message mine. You want to come in? Blah blah blah. He said we'll be in touch. So he might come in and might present for us. That would be cool for a future
That'd be
mastermind.
cool. Yeah, he sounds like he's working on something profitable. I don't know what that means, but sounds interesting. I'd love
I
to know more.
I think it has to do with a video. Anything with YouTube. So I the whole idea with the market structure break is that there's trapped people when the structure breaks, and this is a bullish one. And the way it's determined it's bullish is you look at kind of where the low is. It's kind of where the position of the order block. So the hollow boxes or order blocks on this indicator. I'll get rid of these lines. And then this hollow box position at the highs is a bullish or bearish order block.
Yeah.
And when it breaks, it implies that there's trapped bulls and bears. And I like that kind of style because it makes more sense in terms of a market, because the market is a zero sum, meaning there's some losers and there's some winners, and that's what the zero sum means, is that in order to have winners you got to have some losers, and that implies just how the market moves is that the auction model, and sellers selling at a loss, and then that moving price. I don't know, that's kind of just how that kind of language made sense to me. But when you said the market's in balance, it's in balance. That's kind of what this represents, is that there's two order blocks and it hasn't broken structure. It's consolidating, and we're waiting for a breakout. And that's kind of what you were saying. Market's in it's in balance, and it hasn't had a decision to distribute yet. But when it breaks, it's what makes a market structure break is when the candle closes above or below the high or low of the box. So this is for some, like some people, like ICT teaches you how to do it manually, and I don't see any reason to learn it manually when I have something that could send me a signal to my phone. I don't know.
Yeah.
It would be nice to learn it, but for the most part, I don't mind being dependent on indicators. Like I don't like people who shun people who say that they're purists, like on price. Like I don't need an indicators.
Yeah.
I just need to look at price, and that's nice. But like I don't think it's also profitable to shun people who use indicators, because indicators are just another mirror of price. They're representations of price.
Of course not. Yeah. In fact, I would second that. I would use indicators to make all the manual, essentially automate all the grunt work, right?
Yeah,
And then
exactly.
use those indicators to make informed decisions. That's where the human intelligence comes in. That can be automated by, or at least not effectively. Like you look at Polarity ATI, it may be a good entry system, but it's not, you can't use it autonomously.
Hmm.
Uh, at least I don't think you can. So my point is, yeah, I think you use indicators to sort of automate all the grunt work. Uh, what are those purple blocks over there? So the hollow boxes are obviously auto blocks, both bullish and bearish. Similar, kind of similar to support and resistance in a way. What are the purple things?
So
Purple boxes.
this purple
Oh, you got rid of
box,
them. Okay,
I drew in because it's a fair value gap.
gotcha.
So a fair value gap is kind of like a magnet. It's in balance. It's like the tails in the market profile. So a fair value gap is in it. You see an engulfing candle, and then you draw a box from the previous wick low to the wick high of the candle after the engulfing candle. So you see that
Yeah.
from this candle to this candle.
Hmm.
I so fair value gaps, they are hard to navigate. They give you a target to shoot for because these fair value gaps are like magnets because it's saying that there's trapped bullish people here because of this engulfing. It's created inefficiency, and this gap wants to get filled. So the what makes fair value gaps a little difficult is that it could either get rejected at the bottom here and delay
Hmm.
getting filled, or it will get filled. And so that I use it to in here to show like it's a area where it's going to be drawn to, and it's either going to get rejected here or it's going to go fill it. And I I'm thinking it's going to fill it. So here, this is a daily market structure break here, and it's got a wide range. It could fill all the way up, probably to fill the daily fair value gap right there. But there's also the hypothesis that there's a depending on which one you look at. Like here, there is one here. It's this is a change of character. I think. Let me look.
Is this indicator
Free.
available in TradingView
Yeah.
or it
I
is?
got to get the label on there. Shoot.
It's called
Um, if
BOSCHOCH.
you just look up Nephew Sam, he's got a lot of the good stuff. It's a breakup structure,
Gotcha.
but usually,
So then how do you use this to trade? So I see that you have this on a 4 hour time frame. So on an intraday basis, how do you use this? Or
so
do you use it, I
I
guess?
you could either use it as a target. So on the 4 hour, you see how it broke the structure, but it never came back to retest it. It never
Yeah.
touched it. So I'm using it as a target right now for a long. On the H4, it's holding as the breaker. So it's we could assume that an order block is holding this up, and
Yeah.
because this is naked, it's gonna draw it like a magnet. So an
Yeah.
example would be using the weekly. So the COVID nuke, it actually stopped at a weekly breaker, and we could show that here, and then we would just have to expand just what it could see, because this I've limited to 50. We can max it out, and we could see it actually, depending, if you use ES, it looks a little different. It hit it like exactly on the order on the breaker, weekly breaker.
Wow.
Yeah, you could. Are you looking at it? Like
Yep.
it. So this one it didn't close below, but once let's see, speed it up a little bit. So this is the weekly. I like to look at the weekly in the H4. Um, so that's when it touched. Yeah, basically, it closed below here. And it purged. I think there was a breaker here that never closed, but this one, it it pretty much wicked into it, and that was it.
Yeah.
And then it went away. And
What are the odds of that? It's amazing.
and what was interesting about it was it was naked. You see this? It hasn't. It didn't
Yeah.
really test it. I mean, you could look at it and be like, well, it retested right there. It's I don't know. It's a little difficult to kind of tell if it's been tested or not, but I would like to think it hasn't been tested here. And it's just a good area where of support and resistance. It kind of makes for a stronger case for strong support and resistance. And for intraday, I like the H4. Um, it's not 100% foolproof because you kind of have to take into context like the patterns. This is the ES. I'm gonna go back.
Isn't the H4 too slow pace for intraday action though? I mean, I'm just curious because I know I use 15-minute charts in trading view. I'm just curious. Stage
Um,
4 sounds like a really long time frame. That's what I would do if I was swing trading
yeah,
these.
so it's more for a swing trade. So for intraday, but the thing is like for getting the H4 for the most part tries to filter out chop. So
Gotcha. Yep.
for example, these I haven't had any breaks on this, but I've had
Yeah.
breaks. So not no knock against nephew Sam, but I've had some false signals on this. To pretty much on the last week of the year, the change of character thing signaled, but then it got stomped out by this huge, I guess, engulfing over like the day. And you could see that through this kind of replay. We'll show you right here. So this was, it was a little bit before that. I have to back up the speed. So it was here. This was Wednesday of the last week, and this is when I told you I had that 2K loss because I was
Mhm.
looking at this
Yep.
thing. So here we had a break of structure, and this is what I call a nested breaker, where they're kind of ping ponging into each other. It's a war between the bulls and
So break
bears.
of structure is basically going from one order block to another. Is that what a break of
Yes,
structure is?
yes,
Okay.
and it's a capitulation. When it took out,
Gotcha.
it was created by this close of this candle. This candle close created that break of structure. Oh shoot, I didn't jump to it. There it is. So this candle close here, when it closed on the H4 4 hour, it broke that as basically displaying information that the bulls capitulated here,
Yeah.
and then any kind of retest in here would likely get rejected. It's a possibility of a reversal, and because the bulls capitulated, but because it's the last trading week, you can't really take in that information seriously. Here, nothing broke. So I like the market reversal EA on MetaTrader 4 better because it's more of a higher quality signal. You still when it's just creating a macro pattern like a head and shoulders or something like that, it's gonna trigger and give you a signal that might come back to it and totally stomp it out on the H4 because it's faster than the weekly. But usually you need to wait for two signals, two breakers, in order for the real
Yeah.
swing to take place. Because head and shoulders, if you think about it, it's going to swing once and then it's going to totally stop it out and then swing again. The second H4 breaker would be the
Exactly.
one you would take. But the overall message of just a market structure break is that there's bulls or bears that have capitulated and they're trapped. And there's some that are trapped. And we expect a retest into it, and it's either going to leave it naked or it's going to retest into it, and the best entry is on the retest resumption. So that's a really well-known, price action entry is the retest resumption of support and resistance, and I prefer to do support and resistance from the market structure standpoint because it implies that there's trapped bulls and bears, and that's one way I can see traps is through market structure breaks, and the other one is through moving average channels. But
Yeah.
yeah, here on this indicator, we could see just how chaotic it got. So here we closed above so this was supposed to hold. It was a possibility of a reversal, and it failed. And this is the signal it closed above that box that was here, and it changed it,
Yep.
and then this is how you could see how choppy it was. It broke that one. It broke the break, and then it broke the break again. So you could
Yeah.
see how choppy it was in that last week. So that
Oh,
yeah, and then it broke the break again. So and then it broke the
that's
break.
crazy.
Yeah, and this move broke that break. So when you said it was choppy, you could see it literally in just
Yeah.
the amount
Hmm.
of absorptions of those breaks that took place. But you could see it's still rounding. It's rounding out here, and
Yeah.
it's looking more bullish. But the breaks are just a higher probability of a support and resistance move, and the retest resumption is the highest entry probability of a continuation. As you can see, those retests didn't really resume. They totally squashed
Yeah.
and absorbed the move that was possible. So, if you did only an entry on the resumption versus the on the breakout, it would have prevented you from entering. But and I guess that's where this and the indicator would be in agreement, is that there was no real breakout that happened, because here it didn't break, and then here it didn't retest and resume. They got absorbed. So that's the only point
Exactly.
where it agrees. But yeah, the H4 is really good for entries on a swing, but it also filters out the chop intraday. Like if you wanted to trade the chop, you could have for day trading. That's why I resort to the 15-minute market structure break when it comes to. So these gray boxes are the opens. It doesn't tell me if they're the. So this one's the London. This was the New York, and when it came to the London session, it broke the 15 to the upside. But then when it came to New York, it broke the 15 breaker to the, or it before New York, it broke the 15 to the downside. So this is where the first time where it broke both sides, and I had a difficulty of just taking do I trade long or short, because it broke to the upside and the downside here. That was the first time I've
Yeah.
seen that. And if I got an entry above the last week high, oh, that would have been a great entry, and then like a nice nuke to the downside. But if we go to a previous day, so it's a little difficult to discern, but I think this is London here. We had a nice break of the market structure, and then a retest into here, and it looks like this is the resumption candle that actually closed above the breaker, but it consolidated a little bit more. But it was a nice entry to the long side, and that's kind of what I like for an entry day signal. So remember, I said I didn't overhaul my alerts. It's because I was
Yeah.
using the 5 minute. The 5 minute, it's got a lot of chop in it, so I decided to upgrade to the 15 minute, and to make
Yeah.
it so it's a clearer bias in the day. And then you can see after that we get to this one. The 15-minute market structure broke. It continued down until it broke to the upside here, and then got rejected. This was I guess a order block here. I don't know. Uh, yeah.
Looks like that. Yeah.
It helps with more of a bias compared to a volume profile. You can see here. I think this was a London session, or London or New York. I don't know. I think this is London. This is New York. And then once we broke that here, this would have been a good open range breakout. So here is the range. This is London session, and then we had a cleared the order book on the lows and the highs, and then it broke, and then it signaled a really good short until the Asia session here. But yeah, that's kind of just
Wow.
the market structure break. It's trapped bulls and bears and implies a capitulation, and it makes for really good, uh, retest resumption entries and support and resistance. And it's more of a dynamic support and resistance that doesn't repaint and is more information that you could take live and act on it. So here into the ASA session, I actually got a long. I got a long here because we resumed off to here. But once we broke the 15-minute here, I got out of my longs because this implies we're going to range here,
Right. Yeah.
and just like you said, we're in balance right now. I don't want to say imbalance, but we are in balance, and we're just going to range and range until the London puts in a low, and then usually it'll put it in a low, and then a 15-minute order block will appear, and then it would break it, and then that's when I would get in for a long. Um, yeah, it
Gotcha.
and I like to look at a weekly fractal basis, like a weekly H4, and then the 15-minute governs my daily bias. But it made let's see, where's the one? Yeah, this was today. It made today really difficult because we had one to the upside and one to the downside, and so that's the first time I've seen that, and I ended up making the wrong decision. The Bears have been really strong, like last week and this week. It's just they haven't been successful. They've been strong, but they're not successful and just really tearing it down. So it just makes it difficult. But
Yeah.
yeah,
Yeah, like I think what's interesting about the market profile and what you're showing right now is your upside targets are also actually very similar to mine. Um, I think you said 3,900 or something around that, right? 39, yeah, there you go.
39.21. So this is the S&P 500. Yeah, on a
Yeah, that I
synthetic.
was looking at the ES, right?
Mm-hmm.
So obviously some differences, but still overall,
Yeah, for ES it's
um,
39.55. For them 56.
55. Okay. Yeah, and I think mine was, let me take a look at mine. Um, Yeah, it's 39.15 is the first target, and then 39.30 is the second one. And then there's
39.30.
more, but I think 39.30, yep.
Yeah, like that makes sense. It's like oh, I need to go to the ES. This one's saying like if you were to fill or come close to filling like a wick above, it says 39.70 on ES.
Gotcha.
But yeah, it's similar.
Interesting. Yeah, so I mean, yeah, yeah.
But
So
yeah,
it's
like
it's
the actionable things is like the break, and then if it's naked like this one is, it's a great magnet or target, and
yeah.
you don't know if it's gonna bounce off of it, but that's where you gotta watch. You gotta watch it, and for if it were to come into here, I would be looking for a 15-minute market structure break to the downside, or an H4 breaker to the downside, and I would be using this. I'd be waiting for an alert sent to my phone, and this trading platform sends alerts to my phone for free. There's no limit. So, unlike TradingView, you got limits, you got to upgrade plans for
Yeah.
alerts. So that's why, and I like these signals better. Um, it makes it kind of confusing
Can I
because
ask?
what's that?
I was just curious. So that platform is MetaTrader 5, right?
In MetaTrader 4.
4, okay.
Yeah,
Yeah, I've heard a lot of things about it. You use this to trade, or is it just a data visualization platform?
both, but I'm waiting for E8 Trader Funding to open up a free um, eval account again because I was having a little difficulty on just determining because you know how Apex has um, their packages with the account size and then the trailing
Yeah.
drawdown. So I misinterpreted that I was trading with the full clip, and I didn't adjust the risk management for the trailing drawdown, and that was the real number to use for the risk management, the position size. So
Yeah.
I was trading with an outsized position size, and I was like, "What the crap? Why am I, failing this challenge?" It's because I was using the full amount as the position size instead of using the trailing drawdown as the position size for 1%. And that's
Yeah, the account size is misleading
it is.
because uh I mean I just signed up for a static account, right?
Yeah, you told
That's a
me about it.
100K static account. But I mean my drawdown, it's a static drawdown, so it's not trading ultimately. But the static drawdown is 625. So, I have to essentially limit my loss on trades to ideally be $60 or less, and that will give me, essentially 10 successive losses in a row, uh,
What
before
was
I get,
what was the
blow out my account.
appeal for the static account? Remind me of that.
I just hate the
The
trailing
trailing drawdown.
drawdown. I
Okay.
feel like there's a sword hanging over my head,
Yeah.
and I hate it.
Yeah, because it moves
Oh,
up.
yeah. Also, I think my risk appetite, like the static account will not let me trade more than two contracts at once, two full-size contracts, which I don't do anyways. Like I'm never trading more than two full-size
Of
contracts.
ES.
Uh, yes, yeah. Or any of the larger, like NQs, what have you. I'm never doing more than two
Well,
contracts.
think about when it
I
grows
can
though.
see the appeal. What?
Think about it like if the account were to grow a lot. This is assuming that you're going to be taking a lot of
Yeah, so
withdrawals.
my goal with this is, I really want to just be successful in it, right? And I think this was, in my opinion, at least getting to a 2K profit target in this is reasonable. So I'd like to get there, be successful.
Is
And
it
then,
cheaper?
I might sign up for additional accounts, once I feel more confident.
Is it cheaper than the
But
50K?
it is, yeah, it is cheaper. But that wasn't my main motivation. It was just the fact that I like the static drawdown.
Yeah, versus like a trailing.
Yeah. So, just, like I think I today was my first day trading it, and I think I made a $60 profit. So again, nothing in context, but I feel like if I could scale that up to $100 a day, then 20 trading days I could get to a 2,000 target, right? So start slow, take it easy. But again, it's a static drawdown, so I don't have to worry about that drawdown trailing me at all times, because that's the most annoying part for me, just personally. Because I'm not a scalper. I try to, I'm not like scalping four ticks out of the ES. I'm usually waiting for 10, 15 point winners, uh, which gets harder when you have a trailing drawdown, because, if you're in profit, then you sort of wait for a pullback, and then again you're in profit. It kind of doesn't give you a chance to go after those larger size opportunities.
Right.
Right. So personally, I feel the trailing drawdown, again, this is just my personal opinion, the trailing drawdown is not consistent with the way I trade, which is I look for high probability setups. Again, sometimes they'll go against me, but then I will kind of wait. If it hits my stop, then that's so be it. But otherwise, I've had many a trade, go against me and then go in my direction eventually.
I don't know. Like, to me, I interpret that these two accounts are the same after this one hits the break even of the trailing threshold. So, say this turns into a performance account. Once this gets into profit of $2,500 profit, it's basically now building the value in the account. And this one just starts building the value account a little earlier. But eventually they both reach the same point where they this one loses its edge once this account moves past the trailing threshold. But yeah, I could see how personal preference could help in passing the account early on in terms of the style on how you trade. Just because one might give you more grace. Because, like, the reason why I took these is because
Mhm.
right now I know that my risk management and patience level isn't at where it should be, and that's kind of why we're kind of holding each other accountable and to where we can teach that into us. And it's going to take time, But
Yeah.
that's kind of why I picked this account. Is because I'm more of a swing trader. I'm not a day trader, and I get a little greedy and I get stuck in my bias. So this allows me to just kind of work that out. Obviously, it's going to take longer. $20,000 profit goal is like almost impossible.
It's
So,
a lot. It's a lot. Yeah.
so
And the issue that I have is the trailing threshold is 7,500. So if you, like you said, right, I think that, and that's the right approach in my opinion, is if you take a 5% risk, tolerance of each trade, what is that? 75 times 5, right? 150, 300, 375, right? So you cannot stand to lose more than 375 per trade. And if you lose, like I think that would be probably my risk threshold, right? 5% for this account size.
yeah,
So 375 is what I would think of.
yeah. So like
Uh,
for the most
and
part,
that's a pretty comfortable margin, like unlike my static account, which is 625. So my risk tolerance per trade is 6250
uh
because again, that would mean I would have to lose 10 trades in succession.
yeah, like my skill isn't enough to where I could pull this off. Where I'm in this like Facebook Apex group, and then I see people doing like batches of 20 of 50K accounts. With the 50K is
Yeah.
not a big deal. Like it's more of just the size. They did 20 of them, and I look back to this last week. I did really well in the performance. Like I don't know, up I think 5 grand over the past 2 weeks, and then or 3 grand, and then out of nowhere I lost two. Well, I would have pretty much hit this trailing threshold already, and that would have been for
Yeah.
all 20 accounts, and that would have been devastating. Like imagine you had
Then you would
20.
have reached your profit goal as well, right? Your
Yeah, I would
3K
have I would have
profit goal.
passed the accounts, and that would have failed them right away. So this
That's true. Yeah.
this makes sense to me after I have these. I need like a base, and then once I have a base of accounts, then I could, do a little bit of these. It's just that I would take less risk with these. Like I'm so bold, and I would like to have room to be bold. Some accounts I could be bold
Yeah.
in, and then accounts that I don't have to be bold in, which is this, and to where I'll be like, I'm not going to trade that account today. Yeah,
Yeah, for me it was more for me it was just truly it was the opposite, right? It was for me it was like not trying to be bold. Uh
uh huh,
because I think I've been bold and I've lost money. So for me it was to take it easy. And I know with 625 that's not a lot to work with at all.
is none.
Uh So it's going to give me, it's going to almost force me to follow proper risk management, right? Which is essentially I can't lose more than 60 to 50 a trade. And that again will give me only 10 trades in succession, 10 losses in succession, which again may happen, right? If you're in a bad streak. Oh, so I'm hoping against it. I'm hoping that's not the case. But it gives me some buffer, some leeway to work with.
Yeah,
So for me, it was actually more about bringing in discipline because I did not want to try to be bold. And then the other thing was just trying to get, profit target quickly and get paid something, because I paid a lot of subscription fees to Apex over the last several months. I tried something in August and I failed at full transparency. I did the 100K based on the Black Friday sale.
yep,
I blew that. Um, I'm like, I'm sick of paying subscription fees to Apex, and I want to try to, do another one, and hopefully this time pass because the rules are pretty strict. So I know that at the outset, there's no 3K threshold or any of that. So I'm gonna try to follow proper trading discipline and hopefully get to the 2K profit goal.
yeah. Like,
So then again, I have to do it again, right? Because once
well,
you once you get into a PA account, you have to do it again, all over again.
like, what's the practicals? Like for me, I'm in the language of like case studies and practicals. So like, what's the practicals and what you mean by proper discipline?
Yeah, so just trade less size. Like I can't, like I cannot trade more than one micro at this point, right?
Yeah.
Um, one MES micro, um, or one NQ micro, MNQ. Let's say I do an MNQ micro, which I did today. You have a 30-point stop loss, and I have a 40-point take profit for an $80 profit. Um, you know, and a $60 loss. So that's about a 1.2 risk reward ratio,
So then
right? A little more than that, maybe.
what made you not do well in the 100K account?
I just was like, I think mentally, and this is how my brain works, unfortunately, um, I tend to be a risk taker, which is why I'm doing this, right? We're all risk takers. I think traders have to be risk takers in some sense, right? But it
Yeah,
kind
you
of
get that
bites
itch.
us. Yeah, and that's what I did. I was like, oh, I got 3 grand to lose. I'm gonna take some NQ longs, and sure enough, those longs, flew me out. Taking an NQ long was a bad idea. I should have, at least I could have done is taken an MNQ long, right? Not an NQ long.
Yeah.
Or I could have, sort of downside, maybe done 5 contracts of MNQs. Um, I think I did 2 NQ longs because I was like, oh, I could do 10 contracts. Okay, I'm gonna do two. That's not much, right? And I think that thinking doomed me essentially.
Yeah.
So I can't afford that thinking anymore with the static account. So that's uh,
I don't know. Like I'm
so that's
thinking
the reasoning.
I'm thinking if you're a swing trader, you're gonna act like a swing trader and trade like a swing trader. And I do
Yeah.
that. It shows in my risk management. Like for example, case study today. I was going long, even though there was a high probability it could go either way, and I revenge traded. And you could say that's for like any trader, but in
Of course,
in
yeah.
terms of like a swing trader, like it I could yeah, swing trade, there's like a wider stop loss usually when you do a swing trade, because you're
Exactly.
assuming that it's gonna succeed over a long time frame. And and usually those people that I can't verify this, but I based on what how I trade and how I think, I get stuck in my bias easily. But when I hear Lee Sampson when he does the Market Structure Trader live, and he talks about day trading, he says that day traders don't have a bias, and that's more of like the volume profile view, and that bias is actually dangerous in terms of intraday or daily trade view, and
Yeah.
it that makes more sense in a day trading kind of thinking. So based upon that, like me getting stuck in my bias, shows what kind of trader I am and the amount of mistakes I'm more likely to make. So I don't know. It kind of brings into question if you're gonna do those mistakes again, because the case would be, uh, as a swing trader, it's going to be harder to stick to that. I kind of wish that there was some software to like like prevent you from trading once you hit a certain point. Like I was doing some research. Like I heard this thing called Equity Guard, and I looked at it. I think it doesn't work anymore, but it would stop you from trading if you hit a certain loss on the account. So I don't know. Like if I could find something that worked that was like that, where it locks you out for the whole day, that would
I
be
think you can
great.
do that in Ninja already. You
You
can
could.
set, I don't know if you can do it easily, but in the
Where?
not in the software, I think you have to log into the account. Maybe Rhythmic you could do it through Apex, but you can define a daily loss limit.
Daily loss
Yeah,
limit.
there you go.
Okay, let's look at Ninja Trader Equity Guard. Oh no, daily loss limit. There it is.
Yeah. You
So
you can
what
set it
does
up.
this
I
do?
believe you can. It used to not be possible, but now you can, from what I understand.
Let me look
And a
at
lot of
this.
brokerages will let you do that, and some intentionally will not let you do that.
All your working orders will be canceled. Oh yeah. So then, how do we get this?
Now, this is obviously a NinjaTrader client. You have to be a NinjaTrader client, which we're not, right? We're using Apex.
It's a premium
Um,
feature.
yeah, but I think you could do it through Rhythmic as well, I believe. If you have Rhythmic, I
You
believe
talking about
there's a
this
way to do
thing?
it with Rhythmic. Yeah, exactly.
Okay, so then rhythmic.
I think it's
What is
RITH.
gymnastics?
It's
Let's
misspelled actually. It's RITHMIC.
R I T H M I
Whoever
C.
made this company didn't know how to spell Rhythmic. But anyways, we're
Okay.
built a fairly successful.
Okay, so this is what we're talking about.
Yeah, I think you can do it.
Okay, I'm gonna
There's a way
watch
to do
that
it.
later. But I think I tried downloading this and it didn't work really well. Um, oh my gosh.
Yeah, you could probably do this too. Yeah, this is another way to do it.
I
Uh,
didn't like this though. Here it is. Yeah, it was just really weird. I couldn't understand anything to where I could be like daily loss limit. Daily loss limit sounds more simple. Let's check this
yeah.
out really quick. 4 minutes.
And I'm going to log into Rhythmic, come up, and then this box says if you're setting times
Did
to
we
restrict
steal
trading or
something?
auto liquidate your account, please note these times do not change automatically with daylight savers set by the firm. You could see it's
Yeah, I think there's a
starting a
risk management dashboard. You go
$50,000
there and you define your loss.
account.
You can
I
define
can
your
buy
risk.
and
So you
sell
see that risk
20
parameters set by the
micros,
trader. You
MNQs
see
Yeah,
is
how
the
those
do we
most
tabs
get
that I
there.
there?
can do. Done.
So if you go to Rhythmic, you can probably navigate to, is there a risk management dashboard? Is
Yeah, I'm trying to find it. Let's
there a
see.
trader dashboard? Yeah.
This one or this one?
Try trader dashboard. I guess we could try
Oh,
all of them.
they're the same. Am I missing something? So this is the template. What does it do different? Right click.
View risk.
View risk parameters. Okay.
There you go.
Oh my gosh. If you're setting
Yeah.
times to restrict trading, please note that these times don't change. Okay, it's basically the same thing. Okay,
And
so
if you
loss
go to the
limit.
risk parameter set by trader tab,
Ooh, there it is.
yep, and you can define your own risk parameters, I
Well, I don't
believe.
want to auto liquidate.
Yeah.
Can I just have it
I
stop?
know there's a way to do it. I've heard of it. I haven't done it myself, but I know there's a way to do it.
Let's.
Parameters. Enabled loss limit 1,000. Done. Next account.
Wait, a
View
thousand
risk
done.
parameters. Enabled loss limit 2,000. So this one, what happened was I probably had it at 1,000. I lost 1,000. So I went and changed it to 2, made back to green, never went back in and changed it. So now it's back at 1,000. Done.
So wait,
And then I
does this like make you fail the challenge if you?
No, I don't believe so. You're not breaking any of Apex's rules, right? As long as you don't break any of Apex's rules. Like I had, this is like 6 months ago, so I've really forgotten. But what I had said, one of the rules in Rhythmic was to like disable trading ETH because I tended to trade overnight a lot, and I always messed up. So I decided not to. Um, but I would just double check before you said anything. Okay, yeah.
Let me. I need to double
Maybe
check. Yeah.
change again. It doesn't break
Hey
any
everybody, Pro
rules,
Trader
but
Mike. In
as long as you
today's
don't break
video,
any
I'm going to be
Apex's rule, you
showing
should be
you
fine.
Okay.
These are rules you're setting for yourself, basically.
You can offset big losses in the account, so you don't bust your account. So, yeah, I hate being the guinea pig, but I want to try it just because it the
Yeah,
my
I've
problems.
used it. I mean, I've used it, but not for daily loss limit. I've used it for trading times, basically.
Okay.
So I've used it to
Ooh,
disable, like, I couldn't trade until 9:30 in the morning. That's how I've set it up. I
where
had set it up, not for
where's
not
the
for this
trading
account, but I
times?
had set it
Oh, here,
up.
no trading from here.
Yeah, you see those products?
Yeah,
You see the products at the
uh,
bottom? It says no trading from to no trading to.
yeah. And then what did you put?
I had done 6 p.m. Eastern to 9 a.m. in the morning. So I basically couldn't trade the overnight session.
So then this is Eastern, or did you put in like a different time zone?
I just put it in my local time zone.
Okay.
Again, I would not recommend you do that. That was just my own. I sucked at trading over the overnight session. I always
Okay.
felt like I had the right trade,
Okay.
and then I would, go to bed and wake up in the morning, and I was like, damn, my trade stopped out, and I can't do this again. So,
So what I'm planning to
can't,
do is that if I buy some accounts come this paycheck, we'll see, and the deal's still going on, I'll try it on one account because I just don't feel comfortable with the current accounts I got. But if it's successful, uh, I want to apply it to all of them. But yeah, this is really interesting that I want to try and apply. Just because it would be a game changer because the two things that I struggle with is one, patience, and two, what was the second one? I'm a swing trader, so
yeah.
I'm gonna either bet bigger size or I'm gonna be impatient to where there's a wide range that I think is acceptable, but it turns out to be losses in a day trade. And so that's my tendency. And if I could either restrict it or force patience on myself, like either through an alert system or through that auto liquidation, like it would help my risk management. So that's kind of just something I'm thinking about. Um,
Yeah, I mean, to the extent that you can automate a lot of the grunt work, I think you hit the nail on the head earlier as well, right? You can automate a lot of this grunt work, indicators, loss limits,
yeah,
rules. That makes it much easier for you.
yeah,
In fact, I've even tried to like automate my trading logs and all of that, but I realized it doesn't work for me. I have to like document it manually because that's the only way I kind of rethink the decisions I made, or because otherwise there's a lot of trading software that you can just like there's these trading journals, right? You can just download them and there's a small subscription fee, but they kind of catalog all of your trades. And that's all well and good, but it doesn't capture kind of your state of mind and what you were thinking and what your hypothesis was. None of that is captured. So that's why I just use a simple Excel spreadsheet for my trading journal.
okay. So
Um,
we're gonna wrap things up. We're gonna do
yep.
conclusions on both sides of just kind of your overall message and what you taught, and then we'll stop the recording, and then we'll kind of give like homework on things that you want to see in the other person, and then we'll kind of close out. We'll try to wrap it up in like 5 minutes. But
Nice. Yeah, I like how you've really thought this through, which is good.
so like
Um,
conclusions of just what I taught, and then you could go next. Is market structure break can be seen fractally in different time frames. If you want to see appropriate time frames, you could go to my Twitter or you could look at the market structure trader. He's got a list, and it's my pinned. Where's my profile? How do I look at my profile? There it is. It's my pinned tweet. Yearly, weekly, monthly. I do the weekly H4, and you could do H8 H12. Like was it Trader Main? He likes the H12 for swing, and he does more of the order block. I don't know. Like when I see his trading style and how he charts, it's a little more difficult for me to like pick up. But I do the weekly H4, and the overall message is that a market structure break is a signal of capitulation and a possible reversal and trapped buyers or sellers. And also a, a chance for a setup or play of retest resumption. You could either take the breakout or you could take the retest resumption out of the breaker. And breakers, oh no, the market structure break could be used as either a target or an entry, and it is an implied understanding that there's a possible reversal. And daily fair value gaps is
Yes.
untrustworthy, but it is experimental for me. Out of all of ICT's teachings, the two best ones is either that supply and demand or the order blocks, which is the support and resistance on the weekly and daily. And then more specifically, the one I use most frequently is the market structure break. It's had higher success for me. And then the fair value gap is last. It's very unpredictable versus the market structure break, which is more predictable. You could use indicators from nephew Sam. He's got some good indicators on market structure break, or Lee Sampson with the indicator, the market reversal alerts. And that's the one I recommend on H4. You could do the aggressive mode or non-aggressive. This one's currently, I think, on the non-aggressive. Oh, it's on the aggressive mode. And sometimes it works well in non-aggressive. Sometimes it works well in aggressive. But for day trading, I prefer the aggressive mode. And specifically, I use the 15-minute for my day trade bias. Um, and that's about it. I'm going to do a case study on this. The one downside is when the breakers become nested. So one example is on the weekly here, when we started having this chop here, we started getting some nested breakers. I think there was a nested breaker here where we were ping-ponging here, and that was shown here pretty much. And anytime there's a nested breaker, it's pretty much a time to just not trade or just wait until you get an exaggerated high or low. And I would recommend looking at the RSI for oversold, overbought extensions. Um, Either the weekly or the daily RSI on those kind of overbought, oversold extensions. But that's the summation. On the conclusion, for the most part, these are not certain. The exact same thing with volume profile. There are no certainties. There's only probabilities. So these are
Yeah.
a probable reversal. They're not certain reversals. So risk management is key in this, but it does assume a bias. It does assume a bias with a direction when you use this style, and that is the what makes it hard for day trading. Is that day trading, it is actually better to not have a bias. So that's my case. And then, all right, your turn.
Yeah, no, very helpful summary. Um, I'll keep it brief for market profile, but market profile is essentially a tool to understand behaviors driving the market. And I think it kind of uncovers the human element behind the markets. And I think the underpinning theory behind the market profile is the fact that the market is a two-way auction. When price gets too cheap, it starts going up. When price gets too expensive, it starts going down. That's the underpinning principle behind the market profile. And the other thing to remember with the market profile is where price spends a lot of time, that indicates acceptance. And that's
Oh,
why the
okay.
market profile is so key. Go ahead, you were saying something?
I said, oh, okay, but like, how do you know how much is a long time?
It's all relative, right? So if the market, like you saw the profile that I shared, you
Yeah,
saw the A period. It's literally
1 hour.
spent 30 minutes
Oh, 30
on
minutes.
that price, 3,900. So clearly that shows rejection. If the market spent a lot more time there, that would show
Holding.
you
Okay.
that would show you a lot more. So basically
Strength.
the abbreviation that is used is TPO, which is time, price, opportunity. The idea being where, the more time we spend on a price, the greater the opportunity there, the greater the acceptance behind that price point. So that's essentially it, right?
Okay.
Uh, so it's very similar to a two-way auction or any sort of English auction that you would probably have see on in the movies or what have you.
Ah,
So that's the same principle there. Yeah, and then I think the last thing, again, the last principle underpinning the market profile is that markets are extremely visual. So when you sort of see the market profile, you can right away say what the market is doing. Is it in balance? Is it bullish? Is it bearish? Where do you think it might go next? What potential targets are there? And that's all available. And I think again, markets are visual because traders are visual, humans are visual. And I think again, this is where the behaviors come in. But when you see a naked point of control, I think there's traders out there that are looking at that same naked point of control and saying, okay, that's a naked point of control. Let's get there. And that's why I think using the market profile as a directional tool is useful. Again, it's not a trading solution. It's not a trading, it doesn't tell you what trade to take, but it can provide context behind your trades and sort of supporting context for your trades.
okay.
Um, but you have to use market profile in conjunction with other indicators, what have you, whatever you call them, right? So I think the one thing that's really important to market profile, and I think it makes it different from a typical indicator, and that's why market profile is not an indicator, is the indicators are backward looking. I think the market profile is present looking. It's actually showing you what's happening in the two-way auction right now.
Yeah,
So
yeah.
yeah, but again, there's obviously pros and cons.
Yeah, I'm really interested in like the practicals, and I think in order for me to get those practicals, I need to see you either trade live or see how you would analyze something to where you reveal kind of a bias, because I think that's where I'm going to get the most value. The
Yeah,
practical
and I think
side.
once hopefully I can get my screwdrivers, I can add more RAM to my laptop, and that should beef it up. I would think with 32 gigs of RAM, it should be pretty good for video and audio. At that point, I might do a morning session. I might record it and share it with you because I
Yeah.
mean like 6:30 in the morning might be a little too early for you. But I might record it and share it with you because that would be helpful. I think just showing what I see in the market profile. Like right now, when you look at the market profile for ES, for instance, you know, it's pretty much unchanged. But I think when you come back after the London session, there's a lot happening.
Yeah.
The London session has been pretty active these days, so I think that's why my morning review session is actually pretty productive for me at least because I can see okay, this is what happened overnight. This is what might happen during the day today.
Okay. All right. So I'm going to stop the stream there.